Hey, good morning, everybody. It is Thursday, April 30th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products for originators like Originator Success, Grab and Go Social, and Rate Sensei. Thank you for joining me. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, where we talk about what's going on with rates and pricing, broadcasting on Facebook and YouTube. Today, we're going to be talking about what happened with the Fed meeting yesterday, what the reaction was in bonds, the reprices worse, and the good news this morning about how we've seen quite the rebound, a lot more than I would have expected. And we'll talk a little bit about why and also why I don't trust it. So we'll get into that. Remember, if you would like to join me live and you want a reminder so you don't miss a moment of this show, you can get a text alert at hmmr.io/reminder. Or use this cool QR code over here to get signed up. You can also sign up for our daily email at www.ratelockadvice.com. You can also sign up for our text alerts at ratetextalerts.com. Appreciate y'all being a part of that as well. So, hold on. Click that one. There we go. Okay, so if you're here this morning, say good morning. If you're watching on the replay, do me a favor. Just give me a hashtag replay in the comments. Look at all that fur on my microphone. This is my life. My life is that I live with like 5 of these because the cats are these cats always getting me fuzzy. But anyway, I love my barn cats. You guys know that. Don't forget to smash that like button and be sure to comment. Always love to hear from you. Let's go ahead and say hi to the live folks. Allison, Foy, and Tim Klyla, good morning. Rob Stewart, Brandy Brickler, Ron Siegel says today is National Raisin Day. He probably heard that through the grapevine. And he says we need those grapes for more wine. Also, today is April 30th, which means it's gonna be May. That's right. I always have fun with that. That is funny. So we got good morning, Angela Walters, Chris Dickerson, Fast Carbano, Holly Johnson, Lisa Cramp. Great to see all of you this morning. Let's go ahead and let's jump in and get started. First things first, let's bump the screen over and we'll take you over to the technicals and tell you a story. So let's start off this morning. We'll take a look at the technicals, see where we're at and how things are going. If we take a look here this morning, you will see, got to get present to file on. You will see this morning that mortgage bonds currently up 34 basis points. Quite the rebound. I'm going to say that this has a lot to do with month-end trading as well as just some buying from yesterday's big sell-off. So let's go ahead and give you a quick recap of what happened yesterday. We'll zoom in on this, give you a little bit of a better picture. Let me refresh this so it scrolls. There you go. Okay. So yesterday we started the day and we were losing ground as we headed into pricing coming out. So right off the bat, at the beginning of the morning, you could see that we were down quite a bit by the time pricing came out yesterday. In fact, if we take a look, by the time we were already, there, we were already down. It was 31 basis points. We were down 31 basis points in the morning before the Fed meeting even started. So everybody's going to love to blame yesterday on Powell, but it really had nothing to do with Powell. So let's keep going. So as pricing was coming out, things settled down between 10 and 11. It was kind of calm all the way up through by 12 o'clock. But even before the Fed meeting came out at 2 p.m., this is where the policy statement was, right? We were already losing more ground. So we lost quite a bit of ground before pricing even came out. Lost a little bit of ground before the Fed meeting. After the Fed meeting, the initial response was actually pretty calm. Things were, before the Fed meeting, you could see that we lost quite a bit of ground. And this is before the actual Fed statement. So we were down quite a bit. After the Fed meeting, you could see that things were actually kind of stable. See it right here. Things were steady until Powell's press conference. And even through the press conference, take a look. His press conference was over by 3:30. That puts it right about here. Okay. All during Powell's press conference, this is calm. So, of course, everybody loves to piss on Powell and they'll blame Powell. And, but basically in his comments, he didn't really say anything that was hawkish and markets were really calm. we saw all the heavy selling very late in the day, and we saw quite a bit of sell-off. Now, I was expecting to see more selling this morning, and that's, when I did the end of day text alert, I said I didn't have a crystal ball, but I was not expecting what we saw. So we were down. You could see it wrap up. The 10-year was all the way up to 4.43. Oil, by the way, was over $120 a barrel, which I've told you that 120, you don't see it there. So let me right here. That 120 mark, this is a line in the sand. Now, as things would have it, let's take a look and see CNBC. Let's take a look and see what is oil at this morning. You could see that oil is back below that 120. So yesterday we were at 120 a barrel, and that is a line in the sand that I feel is a very big deal, is that 120 mark. So hopefully we stay below 120 again. But right now, you guys can't see it. Let me just pull this over a little bit the right way. All right. So right now you can see we are well below 120 a barrel again this morning. And that absolutely has something to do with why we're seeing that positive reaction that we're seeing in bonds this morning and where things are at. So let me make this full page and we'll get into this again. So taking a look here. Now, see the picture in picture. Does that show the picture in picture? I don't know if I put it next to, or what is this one? This one's Showtime, and it puts it below it. So we can see that side of the screen. Yeah. Ron's got a really good thing today on it. He said, today is the Magnificent Seven earnings are pushing the entire market up today. So yeah, we're seeing a lot of end of day trading and not end of day, end of month trading benefit here. And we're seeing, that's why I do not think this is a reversal. We're not going to see bonds bounce. And I think tomorrow we'll probably lose some ground again. So this gives us some recovery, and it could actually help to take away a lot of the losses that we had. If because right now you look, we're right across from where we were when pricing came out yesterday. Rate sheets should be similar to where they were yesterday. That would be better than the 650, because this is by the end of the day. So Matt Graham changes this number. This reflects how bad bonds were by the end of the day. The day before was 6.38. We started the day, they were probably around like 6.42 or 6.43. So I think that's probably what you would arguably see at the moment. This 6.50, that's going to reflect the worst levels that we saw all the way down here as bonds lost ground on the day. You could see in the candlestick side of things, it was this huge red candlestick here. Now, if you remember going into the Fed meeting, I had said that I didn't think that there was really anything good that was going to come out of the Fed meeting. And that's why I had been in a position to lock anything closing near term, even before we got to the Fed meeting yesterday. And I put that in my text alerts. I put that in my written lock advice. I said it in my live that normally I like to float into the Fed meeting, but I really didn't think there was anything that was going to happen that was going to put us in a position where things could improve. And that's exactly how it played out yesterday. Now, again, the one thing I'm definitely wrong on is I said that, I warned before all hell would break loose when that happens. I don't have a crystal ball, but would expect momentum to carry and bonds to continue worse and rates with them the next couple of days. Although a small rebound is possible. Well, I wouldn't call 30 basis points a small rebound. This is absolutely a really, really positive rebound. But I don't feel, again, one more time, I don't feel that that's due to where we're at. I feel it has to do with, end of month trading, and I don't think it's going to hold. You look at the 10-year treasury yield, we're at 4.39. Take a look at where that put us. We were at 4.35, 4.33. Yesterday, it was at 4.43. So yes, 4.39 is much better than 4.43. It's 4 basis points better. However, I don't feel this is still much, much higher than where we have been. And I feel like this is just a temporary reprieve that we're seeing this morning. As far as this morning goes, I'll give you some heads up on things. Rate sheets this morning, they should be similar to what we saw, again, one more time, to what we saw yesterday. Not the 650. This is an end of day, and that really includes the butt whooping that we took through the day, but it's going to be more like a 6.42, 6.43. Pricing should be similar to what you saw yesterday when rate sheets came out. Because if you compare where we were right here and where bonds were at, at 10 a.m., you were at like 98.65, 98.64, and that's where we're at now, 98.63 at the moment, so very much the same. Mortgage bonds are the same. Now, lenders may be a little more conservative, so you may see slightly worse pricing as you head into it, but not tremendously. But loans that have more time, you're going to see days like today that you have recovery. So keep that in mind. Reprice risk on the day is moderate. I think there is a good chance that we could see some of these gains definitely disappear today. We were up 30 basis points a minute ago, 28. Not enough that there's a difference here, but I think we could see half these gains disappear. What else is moving stuff this morning? Let's go ahead and take a look at the headlines, talk a little bit about what we've got going on there. When you take a look here, GDP rose 2% in early 2026 in signs of the economy's resilience. Separate data showed jobless claims fell to the lowest level since 1969. A sign that layoffs remain limited. So it's hard to argue that the Fed is in a position to cut rates when the labor market is holding steady and the economy is resilient, right? I mean, this is basically what would arguably be a neutral rate. And that's what happened yesterday. Yesterday, the Fed kept rates unchanged. However, there were 4 dissents to leaving rates unchanged. And the dissents weren't necessarily just about leaving rates unchanged. It was more of, there was Moran, who always says that he thinks rates should be cut because he's just a sock puppet for Trump, which, Ron, let me know. You would know this. I know that you follow this. So Powell yesterday said that he is going to go ahead and stay on, right? Powell won't leave. He's going to, of course, step down as the Fed chair because Kevin Warsh did make it through the Senate Banking Committee. He has to make it through the Senate, but it is a majority, and that shouldn't be a problem, basically. Everyone's taking that for granted. But Powell said he's not going to leave his position on the Fed altogether. He is a Fed governor through 2028. This is very unusual. Normally, when the Fed chair leaves their position as chair, they also go ahead and resign from the board of governors and they leave the Fed altogether. However, Powell is not doing that. And he really, again, I know I'm a fanboy. I tell you guys I'm a fanboy. And I know that a lot of people love to throw hate on him, but I really felt that yesterday he did a great job in his press conference. He dealt, even before the questions came out about it, he dealt with it as part of his prepared statements that he was going to stay on for an indefinite period of time. He wouldn't be leaving right away, but that he was going to take a step back and he wasn't going to do anything to challenge, Warsh as he takes over for the Fed, and that Powell was just going to just stay on until everything had run its course with the probe. And we'll see, because now if Powell stays on, then Trump doesn't get one more body to vote his way. And it's funny because Waller, once Waller found out that he wasn't going to be the Fed chair, he seems to have gotten a lot more hawkish all of a sudden, which is kind of funny. And I haven't seen anything from Mickey Bowman recently, but Waller was more dovish when he thought that he was in the running for Fed chair and kind of giving the Trump what Trump wanted, but yet now he seems to be much more hawkish, I've noticed. And but we will see. So Powell says he's going to stay on. But he said, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. I worry that these attacks are battering the institution. And so he's going to stay on for now, and we'll see. We'll see where this all goes, right? Hopefully he, they don't make a big thing out of it with the probes, and he's able to leave altogether. So we will see. So, but this was the other big news. 3 regional Fed presidents broke publicly. Now, Powell was dovish. Powell is keeping that language that I talked about yesterday in the statement that said that the Fed would be more likely, basically paraphrasing, it says the Fed is more likely to cut than hike. But there were 3 presidents that broke publicly with Powell on the language explaining the decision. The dissent itself was striking, not over the rate action, but because they oppose signaling that a rate cut remains more likely than a rate hike. All right. So, Powell is not necessarily the enemy that Trump wants to paint him out to be. He was not one of the ones that's taking a very hawkish stance. Cleveland's Beth Hammock, Minneapolis's Neil Kashkari, and Dallas's Lori Logan were effectively serving notice less to Powell on his way out than to Warsh on his way in, that with energy prices rising, inflation stuck near 3%, and tariffs still working through the system, it's a committee unable to deliver the cuts the White House expects, especially when you look at situations like this where the economy is growing and jobless claims were 183,000 this morning. So, it's really, you're not seeing that weakness. Now, next week we get jobs data, you get BLS jobs data. The last report came in strong, and we would have to see some pretty solid weakness. Now, immediately after the Fed meeting yesterday, expectations of a Fed rate cut. This is by December right now. So this is the December meeting that I'm looking at right here. Expectations of a Fed rate cut, they are down to less than 20%. And there was actually a lot more yesterday. I wonder if it's enough to show. Yeah. So yesterday you could see it was even, I'll change to purple so you can see that a little better. Yesterday you could see that it was even larger, but the expectation that we could see Fed rate cuts had jumped tremendously from where it was a week ago. A week ago, there was almost none. Yesterday it jumped, and it was actually up to like 18%, I think, at one point. And then it fell back down. Chances of a rate cut now improving a little bit again. So markets are settling in a little bit from what yesterday happened, but you can't blame yesterday on Powell. This is just, I think a lot of this was avalanche selling. Once it triggered weakness, we just saw continued weakness. So with what we got there, but my advice, cautiously float everything for now. Let's take a look and see. Let me pop this on here. Cautiously float. So very, very, very cautious. I have been saying to lock everything closing within the next 15 days before today. If you haven't, there's a reason for that. You could arguably hold off till next week's, jobs data and hope for the best there, but I wouldn't. I would cautiously float for today. Let's see where this goes, but I'm basically still in a locking stance. Let me actually edit that and actually put that on there. Hold on a minute. Cautiously float to start, but still in a locking stance. So anything that's closing in the next couple of weeks, I would absolutely, I would still be in a locking stance. Cautiously float. Let's see where today goes. If we don't see any more improvement, take the blessing that we got with a nice little bit of reprieve, lock those loans, and move forward. I would not be floating into next week hoping that we're going to see rates continue to improve because it's going to come down to what's going on in the Strait of Hormuz. So now let's talk a little bit about the Strait of Hormuz. And again, another headline. By the way, 15 to 30, cautiously float, but consider locking anything as risk averse. Could look back here and wish that we had same spot that we're at. So this is something that's interesting because again, I've said this before, I'll say it again. We're not going to see rates move significantly lower. They can't move a quarter point lower or more until the Strait of Hormuz is open, right? So now we're seeing as Hormuz traffic stalls, U.S. pitches new coalition to get ships moving again. The State Department cable shows the Trump administration wants other nations to form an alliance to help jumpstart ship traffic. Now, that's smart. I don't think there's anything wrong with Trump trying to rally other countries in on this to actually get it open. Just weeks after President Trump declared the Strait of Hormuz completely open and ready for business, only to see ship traffic stall. Remember, it was the next day. now asking other countries to join a new international coalition that would enable ships to navigate the waterway. The effort, called the Maritime Freedom Construct, was spelled out in an internal State Department cable sent to U.S. embassies on Tuesday that called on U.S. diplomats to press foreign governments into signing up. The U.S.-led coalition would share information, coordinate diplomatically, and enforce sanctions. In the latest example of the Trump administration trying to restart the flow of commercial traffic through the strait, despite Iran's efforts to lay mines and attack tankers that transit the choke point without Tehran's approval. So, if that something like this were to work, if we did see something like this happen, that's going to help things out. But otherwise, we really have to sit back and look and say, well, what are the chances of things improving over the next couple of weeks? What are the chances of the Strait of Hormuz opening? And there's not significant peace talks happening that we can see anything on the horizon. Also, oil, again, it is below 120 a barrel, but if it pushes up above 120, all hell will break loose. We saw that yesterday. We will see a negative reaction in bonds. That's a big deal. So let's go ahead and see what you guys have to say a little bit here. Good morning, Mr. Zane. MBS Live is following WTI, not Brent. The U.S. uses WTI more than Brent. Yes, that's true, but I'm still focusing on Brent. Watch gas prices in Michigan go up 50 cents in one day. Absolutely. Showtime is a really good view. When you put the comments on the screen, it covers your camera. Which one's Showtime? This is Showtime. Oh, okay. All right, I'll try that. Nicole Semerad, 4.43 is resistance. That was a good bounce off there, was good for us. So you're looking, Ron's talking about for the 10-year. At 4.43. Powell said he was planning to stay on to be sure the Fed stays independent. His opinion of independent, he's staying despite Trump. I don't think it's to spite Trump. I think it's to foil Trump. Once Warsh comes in and shows more inflation numbers, we'll have a better idea of what the Fed is going to do forward. Yes, and I'm curious to see, there was a really good question during the press conference yesterday about, they were kind of laying the groundwork. It almost was a softball. They were asking about why is Powell, did he change to doing a press conference after every FOMC meeting versus before they were after every other meeting? And I think they said they were once a quarter, but I always found, well, that would be about once every other meeting. So, and it was because he said they usually would do a move that coordinated with a press conference so that they could address the move. And this allowed them more flexibility. I'm curious, Warsh, he made comments that he does not think the Fed needs to be as transparent with markets the way that they are. I'm curious to see how that'll all pan out and play out as well. Ron says, if we clearly break the 4.43 on the 10-year, we could head to 4.53. So when we're looking at the technicals there, we'll definitely keep going on. Sean said, are you saying Warsh can manipulate inflation numbers? No, but he was going to use a means example where he was, which I think is actually a pretty good idea as well. Who will be the next Fed mole? Will Nikki T keep his position? That's a good question. So we'll have to see that one as well. All right, my friends, it's 23 minutes in. Time for me to get off. Hope you guys have a fantastic day. Let's keep our fingers crossed that bonds can hold. But again, be ready to lock. I don't think that this is a reversal where we're going to see a few days of improvement. I think it's just a nice surprise, end of month trading, bonds getting a bit of a rally, unless that 10-year drops to like 4.35. If we saw something big like that, then I would say keep floating. Right now it's at 4.39, and I just don't put us there. So Ron Siegel said, Warsh feels it is bad to have all these press conferences when the Fed members put out their comments. They have to support them going forward. Yeah, we'll see. We'll see what that's about. I actually like the press conferences, so I'll be disappointed if they cut them back. So you guys let me know what you think in the comments. As always, I appreciate you. I'll see you tomorrow. Take care, everybody. Make it a great one. Bye-bye.